Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZHAOJIN Mining Industry Company Limited quarterly report. ZHAOJIN Mining Industry Company Limited offers a diverse range of businesses and services. At its core, the company engages in gold mining and processing, including the exploration, mining, smelting, and sale of gold products. The company operates under three main segments: gold operations, copper operations, and others. Under the gold operations segment, ZHAOJIN Mining Industry Company Limited offers O99.99 and O99.95 gold bullions under its own brand name. This indicates a focus on producing high-quality gold products for both domestic and international markets. In addition to gold mining, the company also engages in copper mining and smelting, processing of sulfur ore, and engineering design and development. These activities suggest that ZHAOJIN Mining Industry Company Limited has a broad range of capabilities and expertise across various metal sectors. Furthermore, the company provides technical advisory services, financial services, and catering services to its clients. This indicates that ZHAOJIN Mining Industry Company Limited is not only focused on mining and processing, but also offers value-added services to support its operations and customers. Overall, ZHAOJIN Mining Industry Company Limited's business scope encompasses a wide range of activities, from gold and copper mining to engineering design and material trading. The company's diverse offerings position it as a significant player in the global mining industry. ZHAOJIN Mining Industry Company Limited market capitalization of $104 billion is significantly larger than the average industry peer of roughly $4 billion. This shows that ZHAOJIN Mining Industry Company Limited holds a significant advantage in their industry. ZHAOJIN Mining Industry Company Limited trades at a higher price-to-earnings ratio of 27 times and a higher price-to-book ratio of 4.68 times relative within the industry. This makes the stock appear much more overvalued compared to its peers. However, the broader industry is also trading at elevated valuation levels, suggesting sector-wide optimism rather than company-specific overvalue. Investor should evaluate if the stock is worth its premium price. The leverage on the balance sheet appears elevated, with liabilities of 53% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The net income of a company underwent significant fluctuations over the 2 periods under review. Initially, it increased by a substantial 83%, indicating a strong financial performance. However, this trend was short-lived, as the net income subsequently decreased by 43%. This drastic change suggests that the company faced challenges in maintaining its momentum. A closer look at the profit margins reveals some interesting trends. The operating profit margin showed an increase from 33% to 42.5%, indicating improved operational efficiency. Conversely, this trend was reversed when it decreased from 44.4% to 26.2%. This significant drop suggests that the company's operations became less profitable. The net profit margin also experienced a notable increase from 27.3% to 34.2%, signifying better overall profitability. However, the gross profit margin remained unchanged in the first period, but decreased significantly in the second period, dropping from 58.3% to 43.1%. This decline indicates that the company's ability to maintain its pricing power and control costs was compromised. The contrasting trends in net income and profit margins highlight the complexities of a company's financial performance over time. While some metrics show improvement, others reveal significant declines, underscoring the need for careful analysis and consideration of various factors influencing these changes. The company is indeed generating positive operating cash flow, a crucial indicator of its financial health. The data from various pages of the report consistently shows that net cash from operating activities exceeds net cash used in investing and financing activities. For instance, on page 2, the net cash from operating activities amounts to RMB 1,234,119,111.19, significantly higher than the net cash used in other activities. Similarly, on page 8, this figure is even higher at RMB 1,871,028,644.51. This trend continues across all pages, including page 4, where both 31 December 2025 and 31 March 2026 show positive net cash from operating activities. The report also highlights the company's strong operating performance on page 9, with a net cash flows from operating activities of RMB 345,521,263.22. This demonstrates that the company is generating sufficient cash to cover its expenses and investments, indicating a healthy financial position. Overall, these figures confirm that the company is indeed generating positive operating cash flow. The company's debt level has undergone significant changes over the 2 periods analyzed. Short-term borrowings have seen a substantial increase of 32% and 78%, respectively, indicating a growing reliance on short-term financing. In contrast, long-term borrowings have decreased by 3% in one period and remained unchanged in another. This mixed trend is also reflected in the total liabilities, which have increased by 9% and 3.5% over the 2 periods. Interestingly, despite these changes in debt levels, interest expenses are not mentioned on any of the pages analyzed. This suggests that the company may be managing its debt effectively or has implemented strategies to minimize interest payments. However, without further information, it is difficult to draw conclusions about the impact of these changes on the company's financial health. That concludes the financial summary for ZHAOJIN Mining Industry Company Limited. Feel free to comment below, and I will be happy to answer them when possible.